Hello everyone, we are the Group 6 of ABM Disney and we're going to tackle about Perpetual Inventory System. What is Perpetual Inventory System?
Perpetual Inventory System allows an entity to see a record of each sale and purchase made, as well as the remaining stock and its value. Because computers became too sophisticated to allow integration of order entry or point-of-sale information with inventory systems, these systems became possible. The use of technologies such as barcodes has also aided this integration. Prior to implementing this procedure, businesses relied on a periodic inventory system. The system only needs to be updated or adjusted once a year. Small businesses that do not need or cannot afford electronic tracking system typically use the system. Perpetual inventory is by far the preferred method for tracking inventory because when properly managed, it can produce reasonably accurate results on an ongoing basis. The system works best when combined with a computer database of inventory, quantities, and bin locations that is updated in real time by warehouse personnel using wireless barcode scanners or sales clerks using points of sale terminals. It is this effective when changes are recorded on inventory cards because there is a high likelihood that entries will be missed, made incorrectly, or not made in a timely manner. Does a perpetual inventory system do? As previously stated, perpetual inventory systems enable businesses to update inventory accounts whenever a product is purchased or sold. This system uses technology to track inventory performance in real time and send updates to central databases. For example, a company may use RFI, radio frequency identification tag readers, to scan goods at the point of sale. A POS or point of sale software on a computer captures the information of the sold item and automatically sends it to the business central counting database.
What should your perpetual inventory contain? It is not necessary to update your accounts once a year because a perpetual system does not rely on physical inventory counts like periodic inventory system. It's critical to keep your inventory up to date. You cannot unmask faulty, missing, or damaged inventory unless you perform a physical count. Worse, if inventory counts are not audited, it is easier for dishonest storekeepers to commit fraud. When you go over your records, all of your accounts should match. If they don't, check your system for errors and then compare it to a physical inventory to account for any other errors. The benefits of perpetual inventory to businesses. A continuous system linked to an inventory management system will provide you with up-to-date reports on stock value and cost of products sold. This prevents the accumulation of slow-moving products, which can be disastrous for your business. The stock quantities are correct in this system and the stock turnover ratio is calculated correctly. The turnover ratio is most important metric for determining how effective a business owner is at managing his inventory and selling it.
Accurate financial information. The cost of products sold is always up to date with perpetual inventory systems, providing key stakeholders with a clear picture of the business profitability throughout the year. This is especially important if financial records for banks or other financial lenders must be kept. The system works best when it is supported by a computer database of bin locations and stock levels that is regularly updated by sales clerk using point-of-sale terminals or warehouse employees using wireless barcode scanners. Up-to-the-minute information. Another benefit of using a perpetual inventory system is having up-to-date information. A perpetual inventory system allows business owners to know how much inventory they have on hand at any given time. This allows them to identify when stock is running low and provides them with the accurate information about inventory value and cost of goods sold. This reveals any discrepancies, shrinkage, theft, or even count errors that could harm the business.
Provide accurate information. A continuous system linked to an inventory management system will provide you with up-to-date reports on stock value and cost of products sold. This prevents the accumulation of slow-moving products, which can be disastrous for your business. The stock quantities are correct in this system, and the stock turnover ratio is calculated correctly. The turnover ratio is the most important metric for determining how effective a business owner is at managing his inventory and selling it. Allows for a paper trail. Running a business requires a paper trail. The more information a business owner can gather about his company, the more detailed the paper trail will be. Adopting perpetual inventory systems protects the company from allegations of wrongdoing and provides unarguable proof that it is following the law. Furthermore, it records interaction that can be used for demand prediction and other performance indicator in the future.
Facilitates tracking of inventory. Small businesses frequently fail due to a lack of inventory. You might want to rejoice if your product starts flying off the shelves. However, you must also keep good stock control to avoid running out of stock and losing clients as a result. Changes to inventory quantities are recorded in real time in perpetual inventory systems, allowing users to run reports that can immediately identify goods that are running low or about to run low. Who benefits from perpetual inventory? A perpetual inventory system can be extremely beneficial to businesses of all sizes. Previously, this task entailed calling someone in the warehouse to check for inconsistencies in stock levels. This frequently entailed distributing someone to the company to conduct a physical inventory count. Such a simple task could take hours or even days to complete depending on the size of the company and the amount stock on hand. This wire practices is advantageous to a wide range of businesses. The process is quick and easy, saving businesses a lot of time. Advantages of a perpetual inventory system. There are numerous advantages to using a perpetual inventory system that allows a business to operate more efficiently. These benefits are discussed further below. Avoid ongoing physical inventory counts. It is no longer necessary to conduct physical inventory counts on a regular basis with the perpetual inventory system. This is a significant benefit because any physical count necessitates a business shutting down its warehousing operations for the duration of the count. Furthermore, the outside auditors are not required to observe an inventory count. Instead, they are given an inventory report containing inventory locations and unit quantities which they can compare to.
Trustworthy inventory records. Because a perpetual system records all inventory transactions in real time, the resulting inventory records can be trusted to be extremely accurate, or especially when bolstered with an ongoing cycle counting program. Inventory reordering can be done confidently with a high degree of record accuracy. It also implies that a company can consistently promise firm delivery dates to its customers, which improves customer satisfaction and may even increase sales. Detailed paper trail. A perpetual inventory system keeps track of every transaction involving inventory. This makes it easier to track down record-keeping errors throughout the organization. This is not only a good control, but it also means that transaction investigations can be used to improve procedures and training, increasing inventory record accuracy over time. Reduced inventory investment. Since a perpetual system improves inventory record accuracy, materials management personnel can rely on the resulting on-hand balance data. This means that a company does not have to invest in excess inventory, as would be the case if management did not trust the inventory numbers and thus kept excess inventory reserves on hand. Inventory levels can instead be reduced, resulting in a lower inventory investment.
Integration with other systems. The record accuracy that a perpetual inventory system brings to other systems is a critical advantage. For example, customer service representatives can now tell customers how many units are available for shipment. Additionally, the inventory records can be used by the materials management staff to plan how many additional units need to be produced or ordered from suppliers. Furthermore, the accounting department can now use inventory records to calculate the ending inventory balance for months. Disadvantages of a perpetual inventory system. A perpetual inventory system's calculated inventory levels may gradually diverge from actual inventory levels due to unrecorded transaction or theft. As a result, book balances should be compared to actual on-hand quantities on a regular basis, typically using cycle counting, and adjusted as needed. Perpetual inventory system entails the maintenance of records called stocks cards. When inventory inflows or increases and outflows or decreases are reflected, ideally both the number of units and the cost, with the resulting balance representing the quantities and cost of inventory as a particular time. Provides book inventories, usually used when the cost of each inventory item is a relatively high, such as a car and appliances. Designed for control purposes. A physical count of the inventories on hand should be made at least once a year to verify the balances per stocks cards.
Perpetual inventory system journalizing. Like periodic inventory system, magkakaroon din ng beginning inventory ang perpetual, which is amounting 90,000. Saan nanggaling yung 90,000? 90 pieces of Class A shoes, price 1,000 each. 90 plus 1,000 is equals to 90,000, and that's the beginning inventory. And magagamit natin mamaya ang beginning inventory sa cost of goods sold. Transaction number 1. Purchase 850 Class A shoes on account at 1,000 pesos each. Sa periodic, lumabas na purchases and accounts payable ang entry. Pagdating sa perpetual, since magkakaroon ng inflow ng inventory, madadagdagan ng inventory. So, the entry will be inventory, which is debit, 850,000, and accounts payable, which is credit, amounting 850,000. Paano siya naging accounts payable? Kaya siya naging accounts payable kasi nag-purchase siya ng item or product on account. Kaya siya naging accounts payable. Transaction number 2. Return 50 defective Class A shoes to supplier and receive credit. Since nagkaroon ng return, magkakaroon to ng epekto sa inventory. Since mababawasan yung inventory kasi ibabalik ni seller ang return sa supplier. So, ang magiging entry will be accounts payable, debit 50,000, then inventory credit 50,000. Bakit siya accounts payable? Kasi binili niyo yun on account, so ibabalik niyo rin yun on account and nabanggit sa transaction na receive credit, so that will be accounts payable. Transaction number 3, paid 650 of Class A shoes purchase. So, binayaran na ni seller yung binili niya na shoes na 650 pieces. Since wala namang magiging epekto yung sa inventory, ang magiging entry will be accounts payable debit 650,000, then cash credit 650,000. Paano siya naging 650,000? Since ang binayaran ni seller is 650 pieces, multiply by 1,000 yung price ng shoes each, then ang kakalabasan niya is 650,000. Transaction 4. Sold 800 Class A shoes at 1,500 each. So, ang magiging entry niya will be accounts receivable debit worth 1,200,000, sale credit 1,200,000. Ang selling price ay 1,000 per Class A shoes. So, since sale yung isang entry, magkakaroon siya ng epekto sa inventory. Bakit siya magkakaroon ng epekto sa inventory? Kasi mababawasan yung inventory kasi magbebenta tayo. So, kailangan ding i-update yung inventory account kasi nga nagkaroon ng effect sa inventory. So, the entry will be cost of goods sold amounting 800,000 and inventory amounting 800,000. Bakit siya naging cost of goods sold? Kasi nga nagbenta. So, ang kakalabasan is cost of goods sold kasi benta siya. Transaction number 5. Received 20 Class A shoes returned by a customer and gave credit. The goods were in excellent condition. Nagkaroon na naman siya ng sales return, so magkakaroon na naman ng effect yun sa inventory. So, ang effect is may inflow ang inventory pabalik sa entity, madadagdagan yung inventory kasi nagbalik yung customer sa seller. So, first entry will be sales return 30,000 and accounts receivable 30,000. Since may effect nga siya sa inventory, papasok yung account na inventory which is 20 Class A shoes multiplied by 1,000. The cost per Class A shoes yung 1,000. So, the entry will be inventory 20,000, cost of goods sold 20,000. Kaya, cost of goods sold ang credit kasi may sales return. So, mababawasan yung benta or yung sale. Kaya naman, debit yung inventory kasi papasok ulit yung inventory sa seller kasi binalik sa kanya yung item ng customer.
Thank you for watching. Please leave a like, comment down below the comment section, and subscribe to this channel for more accounting content. Bye!